If we close above 2,500 on a monthly basis by some appreciable amount, how much? He'll probably decide that when we get there. Indicators have to help you with that. When that happens, you'll probably see an even steeper acceleration. So it'll go from, from linear to exponential, geometric. That's how it goes. And, there's more on that at the bottom with regards to that. Where gold goes, silver will outperform. That's my take.
This year, gold prices have reached unprecedented highs, driven by a combination of economic factors and geopolitical events. The precious metal has seen a nearly 20% increase, bolstered by central bank purchases, strong Chinese consumer demand, and its appeal as a safe haven asset during global tensions. Recent market movements have been primarily influenced by growing expectations of U.S. Federal Reserve rate cuts and speculation surrounding the 2024 U.S. presidential election. Vince Lanci, a prominent figure in the precious metals and commodities trading space, provides insights into these developments. He notes that an alleged assassination attempt on former President Donald Trump has had a complex impact on gold prices. Initially, Trump's survival reduced immediate uncertainty, which Lanci suggests could be bearish for gold as it diminishes market anxiety. However, the market's reaction has been more nuanced than expected. Gold futures rose 0.6% to $2,442.40 per troy ounce, which Lanci describes as a delayed bullish reaction to the weekend's events. This movement underscores the intricate relationship between political events and precious metal prices. Historically, significant political events have caused sharp, if temporary, spikes in gold prices. For instance, during Trump's unexpected 2016 election victory, gold prices initially jumped nearly 6% to $1,287 per ounce, reflecting investor nervousness and a flight to safety. Lanci explains that authorities often attempt to maintain market stability following such events, aiming to prevent dramatic fluctuations in gold prices that could signal broader instability. Please tune in for our exploration of Vince Lanci's expert analysis. If you enjoy content like this, please subscribe and turn on notifications for updates. Thank you, and enjoy the video.
Former President Trump and current favorite to win was wounded in an assassination attempt this weekend. Goldfix reported this event to subscribers in 3 event-covering posts. As horrifying as it is, as unnerving as the implications are in this space, we will only discuss it in context of market effects and political effects that have effects on the market. Not only is it imperative to remain objective as an American, for us, it is also better business as the knock-on effects of the event open a door to many global black swans. Specifically, what do we mean by that? Well, Trump getting shot and surviving removes uncertainty in the immediate aftermath. His chances of beating Biden go up. His chances of beating anyone that goes up against him go up. His chances of, well, he's a lock as of Saturday night, okay? That is bearish gold. It's a removal of uncertainty, and we said as much Saturday night and Sunday morning. That's the immediate reaction, and gold did open weaker last night. Now, it's higher sooner than I thought it would be, but it is higher. Further, now we go to the uncertainty part. When an event as that, such as that happens, and the powers that can be prepare for the aftermath, they can prepare for it, like when the markets open Sunday night, that means they will be on alert and make sure things remain as normal as possible, at least out of the gate. A spiking gold price means America is unstable now. If you have doubts of this, look at what gold did the night Trump won the election in 2016. It spiked and then immediately got completely obliterated, okay? Events need to not attract attention to gold. However, this is the uncertainty part. Moving forward, things just got a lot more uncertain in the intermediate term, as mentioned above. Intermediate for me is from now through January 7th of next year. How will the Democrats react to this event? How will Trump react? How will the RNC respond to Donald's response? How will adversarial nations act? How will trade partners who have much to lose act? How will Biden act? We've already seen some of that. All things to watch for. The world is now triggered by things like this. One thing this does is it puts the power of change, both positive and negative, in the hands of individuals again, as opposed to a collective or the state. Okay. Individuals like Trump, not just Trump, but like Trump, are in a position to lead, and people will likely follow, even those that are not his friends, however they direct. Think about what happened on 9/11. This isn't 9/11, but this is a catalyzing moment potentially. People don't know, some people don't know what to feel after events like this. Think of a moderate person on the left. And those in power can lay out that path, whether it's someone on the left who's calling for sanity, or Trump calling for sanity, or either one calling for an escalation of behavior. Okay? This is the uncertainty I'm talking about. For that reason, things just got a whole lot more uncertain for the next 6 months. Pretend a door has been opened to a room full of black swans. Some of those black swans are bullish for gold. Some are bearish for gold. It depends on what individuals do now. And that makes events all the more important. It's in the hands of an individual who steps up. And that could be Trump if the RNC conversation is anything like that.
The gold market is drawing significant attention from analysts and investors, with predictions of substantial price increases. Vince Lanci, a respected voice in precious metals trading, suggests that if gold crosses the $2,500 per ounce threshold on a monthly basis, it could trigger an exponential rise in prices. Technical analysis supports this shift from linear to exponential growth, indicating a potential significant market movement. Corroborating this bullish outlook, Citi has released a report forecasting gold prices could reach up to $33,000 per ounce. The bank attributes this potential surge to a significant expansion in financial flows, underscoring growing investor interest in the precious metal. Several macroeconomic factors are aligning to support these optimistic projections, including a weakening U.S. labor market and a soft June consumer price index, which will influence the Federal Reserve's stance at the upcoming July Federal Open Market Committee meeting. Analysts anticipate these conditions will reinforce the Fed's dovish pivot, potentially catalyzing bullish trends for gold and silver towards the end of the year. Citi's report further suggests positive effects will extend to base metals, with gold price targets set between $2,800 and $33,000 per ounce, expected to be reached by mid to late 2025. Let's get back to the interview.
Gold's long-term momentum trend factors have since had nothing more to say, just a chorus that argues the acceleration phase of this now 8.5-year bull trend has begun. So initial in 2016, and then points along the way. And then you could see basically what you're looking at here is the triple top that people talk about and how we're above it. So there's your consolidation. There's that chart. MSA offers only one further level to watch. When gold clears, I notice he says when. I like that. When gold clears 2,500 by some credible amount on a monthly close, we expect to see this already evident acceleration action take on an even steeper and more rapid angle of ascent, with a dramatic price outcome in the next few quarters. So we pierce, this is as fine as you can get without lying. Someone starts telling you if it gets above this price, we're definitely going up. This is professional technical analysis. If we close above 2,500 on a monthly basis by some appreciable amount, how much? He'll probably decide that when we get there. Indicators have to help you with that. When that happens, you'll probably see an even steeper acceleration. So it'll go from, from linear to exponential, geometric. That's how it goes with regards to that. Now, before we start on silver, I want to make a comment. For the first leg of the rally through, through May, I would say, through April to May, this has been a gold bull market with silver being used to finance gold purchases. That's me discussing behavioral flows. People go out there, players go out there and say, I need to buy gold because central banks are buying gold, and central banks were buying gold. So those people who wanted to speculate long gold or had to cover gold shorts would sell silver to finance it. That's traditionally how banks will, believe it or not, how banks will trade one against the other in order to facilitate keeping both in line. All right. Now, that had been very successful since 2016. I was long silver in 2016 because gold was rallying, and I just did not perform. It did not perform, and neither did I. But since April, May, silver has changed its tenor. It has also broken out, and he goes into this a little bit more at length. The reason I'm bringing this up is because in a normal, healthy precious metals market, silver leads gold. In a precious metals market that's bifurcated because people want gold because they're central banks, or 93, was it 93, 97, when Buffett bought silver, silver rallied and gold did not. When they bifurcate, that's not healthy as the market goes. That's just one commodity being singled out. So for the last 5 years at least, gold has been singled out, but now they are on the same page, is what he's saying. And I'm saying that as well. They're on the same page, which means where gold goes, silver will outperform. That's my take.
As central banks maintain their significant influence on the gold market through their purchasing activities, their policies and actions in the coming months could significantly impact the trajectory of gold prices. Share your thoughts in the comments if you find this video insightful. Join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.